Good morning. This is Faron Gallon at Faron Gallon Sales Cars. I wanted to talk with everyone about why trading your vehicle early in this high interest rate environment, or I should say rising interest rate environment and high inflation, might save you some money. And here's what I'm talking about. If you've been paying attention in the news, you recognize that the Federal Reserve will be raising interest rates going forward to try to stymie the inflationary environment that we're in. Now, what does that mean? Well, the federal funds rate is basically the rate that the Federal Reserve charges banks in terms of the money that is lent to them. And it affects everything that banks lend out in terms of interest rates, including car loans. So what is happening? Well, they are raising interest rates, and that is the Federal Reserve, possibly this week by at least 75 basis points, maybe even a full percent. So what does that mean for the typical car owner? Well, going forward, right now, if just say you're financing $35,000 on a vehicle, and right now a new car interest rate is probably around 4%. So that equates to about a 545, 548 payment roughly. And if you were to pull the trigger on that now, that's what your payment would be. Now, if you wait 3 or 4 months, maybe you're not quite ready to buy, maybe you're not quite ready to buy for another year, a full percentage point would equate to about a 575, 576 payment, which is basically about $25 a month over a 72-month term, which equates to about $1,800 over the term of the loan. You couple that with rising inflation, and with a 3% increase on new cars, you could very well pay more 2 years from now, as much as $3,000 more in payment costs because of the cost of money and rising inflation on the cost of the car. So why am I saying that? So if you're near purchasing a car within the next 2 years, it might be advantageous to you to pull the trigger now, have a lower interest rate, and a lower cost of the car before prices increase. So that's $3,000. So you may pay a lot less now versus later. And that's something to consider. So we're in a rising interest rate environment and high inflation, which means the cost of the vehicle is going to cost more if you wait 2 years, and the cost of money is going to be more. So you could save yourself $3,000 buying today versus waiting until the prices of the cars increase and waiting until the cost of money increases. I'm Faron Gallon at Faron Gallon Sales Cars, 904-495-6051. Thank you.